Imagine this. It's 1985 and you're sitting around a table with family or friends, whichever, and you're trying to explain what the internet is exactly. What do you mean you can search for stuff? A website? What does that even mean? You can buy stuff and you can bank online too and pay bills? Doesn't seem secure. I'd never do that. That's where we are with cryptocurrency. Crypto is the internet discussion in 1985. What is up, my YouTube friends? My name is Adam and this is Broke Man Finance. Today in this video, we are going to talk about some basic things and concepts surrounding cryptocurrency because Bitcoin and Ethereum are blowing up right now and people are trying to dip their toes in that water. But I want to make sure you understand exactly where not to buy it, where you should buy it, and how to protect your assets. Or your ass. That works too. And make sure to watch this thing all the way through. I'm not saying that to try to trick you into just watching it longer because of the algorithm. Yes, it does help, but I'm going to explain things throughout the video about the hows and the whys, because once we get to the end, as far as protecting yourself, it's not going to make sense if you didn't watch the prior stuff. Bitcoin and Ethereum has been on a tear lately, drawing a lot of attention. Back in March, Bitcoin had dropped to the $4,800 range and Ethereum was around 100 bucks. Now Bitcoin has jumped up to nearly $27,000 in value at the time of this filming, and Ethereum is closing in on 700. There are people out there that have expectations that Bitcoin could surpass $100,000 per coin and Ethereum could reach the heights of $10,000. For all the skeptics out there, I can feel your judgy eyes burning through me right now. I get it. It's not necessarily a new concept, but it is a new concept to the majority of folks. Because this is the thing. Innovation, people. Let me give you for instance. I could not tell you the last time I actually physically mailed in a check for a bill. Everything is done online that I do, and honestly, most of that stuff is auto draft. I don't ever even worry about it because it just automatically happens. Does anyone out there still mail in all of their bills under the age of 60? Do you think advertising in the phone book is still a good idea? Speaking of, when is the last time you really ever looked up a number in the phone book? How long has it been since you actually did it? Think about that. Anyway, you get where I'm going. You get where I'm going as far as innovation goes. Crypto is not going away. Digital currencies and their platforms are becoming too sophisticated. I've actually been reading a lot about decentralized financing, or DeFi, lately, after my brother-in-law turned me on to its yield earning potential. But this is the great part for you. We are still in the infancy stages of this thing. We are just beginning to scratch the surface of what is actually possible. A lot of people think they're too late to the game. You are not. You are still very, very early. Bitcoin has been talked about for the past few years and got really popular back in like 2017, 16 and hit those highs, but we're hitting new highs, and we still have a lot more highs to hit in terms of crypto. You're not late to the game. In fact, you may just be on time. The fundamentals of the blockchain is too genius to be ignored. Even the banks are even getting in on the mix now. Every day it is becoming more and more legitimized, although there are bank lobbyists who are always trying to lobby for new regulations against crypto. But this is the thing. It's going to happen. It is getting too big, too quick. This is the evolution of finance. If you're still sitting there shaking your head saying no way and you're in complete disbelief, then maybe you're one of those same people that believe that Airbnb and Uber would not and are not industry disruptors. Just so we're clear before I get started on where not to buy it, I have been a supporter of Robinhood throughout all their turmoil. And full disclosure, I have tried just about every platform out there just to test the waters. And Robinhood still won my affection. I still like Robinhood the most, even as they fix their flaws, they're continuing to make that platform better. Although I do like TD Ameritrade's thinkorswim, I still use them pretty frequently. That's still pretty impressive. But where Robinhood is lacking right now is in the crypto section. What I do believe will be their next big update will be to crypto. However, I would not buy Bitcoin, Litecoin, Ethereum, Dogecoin, whatever from Robinhood. And there's several reasons behind that. But one, you can't transfer it out. You can't transfer it anywhere to a wallet, and I'll talk about that more in a minute. You basically have to liquefy it, meaning you have to sell all your coin, sell all your currency, and get cash for it. If you wanted to transfer some to a bank, to a loved one, if you just wanted to buy something because it is a currency, you can't. Now, if you just want to leave it in there as an investment and just let it build capital over time, fine, you can, but I still wouldn't even do that. Under the insurance policy on Robinhood, it says right here, only a portion of your crypto would be covered. Well, define portion. Is there an amount attached as a percentage? Who decides the size of that portion? They are not insured by SDIC or FDIC, if that's what you were thinking, as you can see right here. Robinhood claims that you're not paying fees, and on its face, that's true, but you are. So what happens is Robinhood is buying their coins from let's just say Bitcoin, from another exchange, who in turn charges Robinhood fees. Robinhood, as nice of a platform as they are, they're not going to pay your fees. So what they do is they bake those fees into the current cost that you see on Robinhood. So whenever you're buying some Bitcoin, Ethereum, whatever, those costs are baked in, making that price actually higher. Now, you may say, well, if I buy it on another exchange and I pay fees, is it not just a wash? It is. That is true. But you don't own the keys. And before we move on to the key part, if you don't believe me, by all means, go read the crypto policy that Robinhood has on their website right now. It's out there for everybody to see. They're not trying to hide it. It's just nobody takes the time to actually go read it. And I think that's what they're betting on. Now, ride with me for a second on this. Just hear me out, because this is what turns a lot of people off, because they just can't. It is hard initially to start getting your head wrapped around. But if you're watching this, you're obviously smart. Robinhood doesn't give you the keys. Not your keys, not your Bitcoins, is the well-known saying, because whoever controls the keys has full control over your Bitcoin or crypto. Robinhood controls the keys, which is your proof of ownership. You should own your proof of ownership. In reality, Robinhood owns your crypto. What they give back to you is just promises and hope. When you own cryptocurrencies, what you really own is a private key, a critical piece of information used to authorize outgoing transactions on the blockchain. Whoever has the knowledge of this key can spend the associated funds. If Robinhood goes down tomorrow, how would you authenticate your crypto? You couldn't, because you don't have the keys. That's why it's so important. If you leave your crypto assets online on Robinhood, for instance, you are basically not in charge. You are entrusting the exchange with your private keys. But what should you do? That's why hardware wallets like nano ledgers are so popular. They look similar to a flash drive. A hardware wallet is a cryptocurrency wallet that stores the user's private keys in a secure hardware device. Remember, this is the critical piece of information that is used to authorize the outgoing transactions on the blockchain network. The main principle behind hardware wallets is to provide full isolation between the private keys and your easy-to-hack computer or smartphones. It's a way to take full control over your finances with a little piece of hardware, so it stays off the internet, off of any kind of wallet that you can find online. You have it in the palm of your hand. Personally, I use Coinbase to buy it, but not to store it. As the leading mainstream cryptocurrency exchange in the United States, Coinbase has become a standard on-ramp for new crypto investors. Coinbase offers a wide variety of products, including cryptocurrency investing, an advanced trading platform, custodial accounts for institutions, a wallet for retail investors, and its own US dollar stablecoin. Now, we could do videos on all those things, but just know there's options on Coinbase. And on a side note, I'm going to leave a link in the description below. This link, if you decide to use it on Coinbase, will give you 10 free bucks to use on whatever coin you want to, as long as it's offered on Coinbase. Also, it's a win-win because it gives me $10 as well. So if you were gonna open up an account anyway, you might as well get 10 free bucks and support my channel at the same time. Win-win. Moving on. Some of the pros with Coinbase is a solid variety of altcoin choices, extremely simple user interface, which if you're a fan of Robinhood, you already understand the value in that. They have very high liquidity, but some of the cons is high fees when you're not using Coinbase Pro, which for a new investor could be overwhelming. So just start with the Coinbase and pay the fees. The user does not control wallet keys, and I'll explain that in a minute. And those interested in altcoin trading won't find as many as some other exchanges. So really, if you're just a common person, a new investor looking to get into it, you really don't need all the other stuff that I mentioned in the cons. But going back to the keys, users do not control their own wallet keys on Coinbase. This is consistent, however, with many centralized exchanges, but it still remains a con for all of them. When a user purchases cryptocurrency on an exchange, it is stored in a wallet that Coinbase has control over. This means that user does not have full autonomous control over their holdings, which in essence is against the ethos of decentralized currency or finance. This can be avoided if the investor withdraws their currency to a personal wallet, preferably a hard wallet like the Nano ledger I was mentioning earlier. Now, since it's on your new ledger, you have full control over your crypto. No more middleman, no more banks involved. You're now the bank, and the ledger is your vault. Until next time, I hope your stocks stay green. I hope you stay safe. I hope everyone takes care and you get rich off Bitcoin.